Something big is going on behind the scenes in China, and nobody seems to be noticing it. China is quietly executing on a master plan to take down the United States as the world's most dominant economy and become the new international superpower, and their plan has just entered the next phase. And what's most concerning for the US is not what China is doing today, but what they are preparing to show the world in the future. China's GDP has already been accelerating rapidly over the last 20 years and is now just behind the US, and in fact, forecasts do suggest that China will overtake the US to have the largest economy by 2030. And the first part of China's master plan to accelerate this growth to the next level is to establish energy and electricity dominance. Global energy consumption has been increasing every year, and now this growth is projected to only accelerate even faster thanks to rapid growth in power demand for data centers used for AI, electric vehicles, as well as hydrogen. Electricity consumption specifically has been increasing quickly, and many Western nations have not necessarily invested enough into infrastructure to keep up with this demand. But China, on the other hand, has been aggressively increasing their electricity generation capacity and will soon generate more electricity than the US, the EU, India, Russia and Japan all combined. Now, these supply shortages in Western nations have led to electricity prices being far higher and more volatile, causing businesses to take a hit due to higher costs for operation. China, however, has electricity in abundance, which gives Chinese businesses access to as much electricity as they want at low prices. The average national electricity prices per kilowatt hour is 18 cents in the US and much higher than this in many European countries. However, in China it is just 8 cents. And what's even more positive is that a growing portion of China's energy does now come from renewable sources. China has really been investing heavily in solar energy infrastructure, ramping up their solar capacity, especially in 2025, so much so that 74% of all of the world's solar and wind projects are being built by China. As China continues to benefit from these heavy renewable energy investments and is able to generate more and more of their energy from renewable sources in the future, the disparity between the electricity prices China pays compared to the West is only going to widen, giving China a major competitive advantage. It also gives China another great revenue generating sector in exporting this green technology overseas, doing $177 billion worth of exports in 2024 alone. This big energy advantage is going to be very important for China to progress with AI advancements, and this is in fact already an area which China is showing immense strength in and showing signs that they will ultimately become the #1 country for AI dominance. At this moment in time, most experts would agree that the US does hold the lead over China in terms of AI model performance right now. But a new report, however, from Stanford University also claims that China has closed this gap considerably, finding that Chinese models have rapidly caught up in quality, reaching near parity on 2 key benchmarks after being behind leading US models by double-digit percentages a year ago. In particular, DeepSeek have made significant advancements with their R1 launch in 2025, meaning that the gap today is very small. The report also finds that China is now leading the US in AI publications and patents, which is also backed up by the AI Index report, which finds that China is pulling away significantly in AI patent dominance, accounting for almost 70% of all AI patents by the end of 2023, and this remains the level of dominance that China is expected to have in 2025, highlighting them as the top country driving AI innovation with inventions of new technologies and products. Eric Schmidt, former CEO of Google, said that while American companies develop proprietary AI models and charge for access, Chinese developers have expanded their influence by creating and distributing open source programs like DeepSeek. He added that the result of this is that America is no longer in an era where China is far behind, with Chinese entrepreneurs finding creative ways to do more with less. And the danger now is that the China-dominated future is already arriving. And also the head of EQT, the biggest US natural gas company, has warned Congress that it needs to cut project approval times, saying, "The threat of not getting infrastructure built has only gotten larger. It's also the threat of China winning the AI race." And in a similar fashion, when it comes to electric vehicles, China has not just caught up with the West, but they are now pulling far ahead. Chinese EV makers were once far behind the top US and Western car brands, and up until recently, Tesla was the top-selling EV company by number of car sales, with a product that was widely considered to be best in class. However, Chinese car companies have been improving the quality of their cars at a rapid pace, as well as offering them for a very appealing price compared to many Western brands. And as a result of these significant Chinese advancements in EV tech, Chinese EV sales have been surging at an incredible pace, and by the end of 2023, the Chinese EV maker BYD has now overtaken Tesla for the top spot for global EV market share. And they have not slowed down since then, continuing to eclipse Tesla's sales growth, and now have more than double the market share that Tesla has, selling 2.6 million vehicles per year compared to Tesla's 1.29 million. And it's not just BYD being an exception amongst Chinese EV makers either, as when we look at the top 10 EV sellers in the world, there are 6 Chinese companies on the list, which includes Wuling as the third place spot. It's also not just national sales within China that are driving these sales and growth numbers for Chinese EV makers, as BYD's overseas sales have risen from just 55k in 2022 to 417k in 2024, with the target for 2025 now being a whopping 800k. Western consumers are definitely changing their attitudes towards Chinese cars, and their appetite for buying them is increasing every year as the vehicles that China is exporting continue to get better and better in quality, while also being at an attractive price relative to the likes of Tesla and Mercedes. But there are also many competitive advantages that Chinese EV makers have over Western companies just because they operate in China. China has global dominance in raw materials and batteries, controlling over 70% of the global EV battery production and nearly the entire supply chain for critical raw materials like lithium and rare earths, giving local EV companies access to an abundance of production materials at a low price. Now, this combined with strong domestic supply chains and vertically integrated production lines that produce nearly all components internally does allow Chinese EV makers to cut costs by up to 30% compared to Western firms. And the Chinese government also invests billions each year into subsidies, tax incentives, and low-interest loans to EV companies, while also funding large-scale R&D to help local EV firms continue with their rapid technological advancements. So with China now being ahead or catching up quickly to the US in critical technology sectors that are going to change the way that the world works over the next 10 years, the final part of China's master plan to establish dominance as the #1 global superpower is to leverage their financial power over other countries, in particular to disrupt the US. Now, the US government is currently in an escalating debt crisis, where debt is skyrocketing every year, and so are interest payments on this debt, with annual interest expenditure now exceeding $1.1 trillion, making it the third largest spending category. And this debt pile is only set to increase even higher with the passing of Trump's Big Beautiful Bill, a package that will cut taxes in a number of areas, with economists widely agreeing that it will lead to a significant increase in the budget deficit and overall government debt pile. Now, the US government is facing a critical problem now, though, in which investors in US debt are concerned about the ever-deteriorating fiscal situation in the US and are selling out of US treasuries, with buyers now demanding a higher yield to take on the ever-increasing risk. Now, this is where China has a pivotal part to play as one of the largest foreign holders of US debt, and can leverage the situation to pile more and more pressure onto the US government's debt situation. You see, the yield on these treasuries has been going up and up for several years now, and the US government is now being forced to pay the highest yields since 2007 on all new debt being issued or refinanced. Now this is a major problem for the US government because higher yields means wider budget deficits in the future and therefore more debt on the debt pile, and the cycle just keeps repeating. Now China has been one of the largest sellers of US Treasuries, selling off around $550 billion worth of US Treasuries over the last 10 years, and the pace of this selling has only been accelerating recently. Now China has therefore been contributing towards these heightened yields and therefore higher interest debt payments that the US government is being forced to pay. However, China still has a lot more supply left in the tank to continue piling on the pressure to the US government. Now China still owns about $765 billion worth in US Treasuries, so they can continue to leverage this position against the US to essentially keep putting upwards pressure on the interest payments that the US government is being forced to pay. Now, if this selling pressure gets too large, then the Federal Reserve may be forced to step in and start buying US Treasuries in order to stabilise the bond market and stop yields from rising any further, essentially quantitative easing all over again. And the last time that we saw a big increase in quantitative easing, which is essentially money printing, we did have rampant out-of-control inflation, as can be seen by this chart showing the correlation in M2 money supply growth and CPI. China is also one of the founding members of the BRICS nations, who are making big moves away from reliance on the US dollar. And as more and more countries join the BRICS bloc, the US dollar's status as the default global reserve currency is definitely under threat. We already know that trade amongst BRICS nations grew 40% between 2021 and 2024, now at $740 billion a year, and also that China has been notably reducing exports to the US since Trump came into power, while also increasing exports to other countries. With trade volume growing between these BRICS nations, who are all using their own local currencies to trade rather than the US dollar, we could continue to see the US dollar's dominance erode. And in fact, we have already seen a significant depreciation in the US dollar so far in 2025, mainly being driven by aggressive tariffs from Trump and also growing trade war tensions, pushing countries to diversify away from the US dollar and reduce their dependence on the US for trading. The US has a whole load of warning signs on the horizon closer to home as well, with tariff wars causing inflation to tick upwards, and we could be set to see a second major inflation wave happening soon. And with economic growth in decline too, US policymakers are beginning to panic at what could be about to happen. I cover all of this in more detail in my previous video, which you can check out by clicking on screen right now. Aside from that, if you enjoyed this video, please be sure to leave a like and subscribe, as that does help out the channel a lot, and thanks a lot for watching.